So, welcome to Game Plan Sunday. Today is January 12, 2020, and we're here with our stock market strategy session where we cover what occurred over the past week, what we noticed coming down the pipeline, and take that information, leverage it so that we can actually, find some plays, some setups in the markets. Remember, if there's no setups, there's no trade. We trade the setups, and that's what we're trying to do here today. And we do it as a community, as a team. The Wallstreet Jackboyz, a squad. It's not all about me. I don't know everything. I know a lot. I know enough to teach and to get you guys up to a level where you can actually navigate the markets on your own without any help from any kind of gurus and nothing like that. All right. So with that being said, let's go ahead and cover what occurred over the markets over the past week here. All right. So the markets were, we got to remember we had the biggest, geopolitical risk that was in the market, where we have the U.S. and the Iran. We're at tension right now. U.S., Iran, that's all over the news. We killed their general, what's his name? Soleimani, something like that. Anyhow, Qasem Soleimani, that's his name. Yeah, we killed the general, or Trump did, I should say, not me. But anyway, we killed the general over there. And I don't know if you guys saw the funeral, okay? But this guy's funeral was like the most monumental thing I've ever seen in my life. And we got to remember, I'm from a small town, okay? Now, I actually live in New York, but I'm from a small town called Kinston, K-Town. It's small, okay? Funerals are just not that big, all right? And I'm in Charlotte, right? So Charlotte is still, it's not that big, right? But, I mean, this guy's funeral was so out of this world. I mean, if you go actually look at it, it's like you can just look at it for minutes of people just piled up. Now, I understand what the headlines print. The headlines said that this guy was planning to kill and do evil things or what have you. But I mean, it was literally millions of people that's in this guy's funeral. So I don't really, again, you can't trust their headlines on every freaking thing. Don't be such a damn nerd. OK, you got to use your insight. OK, it's always a plot. You watch movies like you think they come up with these scripts with no reason. You ever watch Scandal? Like you think they came up with that shit just off the top of their dome? No, it's happened so many times year over year throughout history. They just take it and put it together and put it on the screen so you guys can see it in the entertainment view. But they're not coming up with those scripts from scratch. They actually literally happen. OK, you see stuff like whatever those TV shows are that's out there. Like I know Scandal is one, House of Cards is one. This is happening in real life. OK, you live in a real life matrix. And while we're important in this space is because this matrix is all controlled by money. Understand, everything starts at the money. And that's what we master. OK, so whether you trade it or not, you're going to be able to get some powerful insight from what we're going to deliver here. So anyhow, this guy's funeral was so major that, I mean, obviously people love this dude. OK, don't really know everything about it, but this is a major issue. OK, the major issue is that, we took out this top general guy. OK, now peep the story. You got to think like a movie. OK, think ahead. Like, how's this going to end? OK, just follow me. OK, so we killed this guy. This guy has millions of people lined up at his funeral. I mean, they're just going for minutes, flying through like a drone or airplane, showing you millions of people at this guy's funeral. In fact, over 50 people died from being stampeded at this guy's funeral. I mean, that's how monumental this guy is. I didn't even know he was so monumental. OK, but we killed that guy. And also it caused stress with our relationship with Iraq. OK, but at the same time, Iran quickly responded. And they did like a small attack, at a U.S. bases in Iraq, and nobody died. OK, nobody got hurt. Nobody got killed. And the headline was that, hey, we're good. We got our revenge. We bombed the Americans and we got our revenge for y'all killing our great general. Right. But nobody died. Do y'all follow me on this? Does that make sense that you can get revenge and no blood be shed? It doesn't make sense. All right. I'm going to just deliver the answer for you. OK, so it doesn't make sense. When things don't make sense, you got to understand there's a plot behind it. All right. Now, we can speculate what that plot is. I don't know. Nobody knows except for those that's at the top. All right. But that is not a revenge. However, that's what the print shows. Now, you got to keep in mind the markets. Now, we're watching the markets overnight. And I think I hit Topaz. Topaz is not here right now. OK, so Topaz is not here. I believe Mia, I think we talk. I can't remember. Anyway, because y'all know I talk to our members here. Sometimes we get on the line, right? So I'm like, yo, check the markets. It's crazy. So, the markets is going, mayhem. And I'm going to give you a quick secret here. Like when you're looking at my charts here, I'll show you like right now. What color should I rock with? Let's go rock with the blue since it stands out a little different. All right. So just take a look at the charts here. All right. So just a quick reference here. These are the futures that I'm tracking. But if you look at that blue ain't really showing up. That blue's not showing up. Let's go with yellow, okay? Let's go with yellow, all right? I was figuring it's too bright for your eyes or something, but we're going to have to rock with that yellow, B. All right. So if you take a look at this, this is the VIX, all right? This is the fear indicator. That's at my top of my chain, all right? I always got my eyes on that VIX. We need to know, when fear is in the markets, okay? So when that's red, that's everything normal. Markets is normally going up. Now, when that's green, that's going higher. That means them popped off. I don't know if Trump tweeting, somebody's bombing, North Korea, Iran, whatever risk, something is not good. So we always look at that, and I have them color coded. This is all custom, builds that I have. And again, I, share this with you guys. So anyhow, when I'm sitting here doing miscellaneous things, I can always see from the corner of my eyes. You guys know I got multiple screens here, but I can always see from the corner of my eyes the screens flashing, and they have like these normal flows that they go through. Like right now, this is normal, is not much activity. Okay. Now when these start lighting up, flashing like this, my eyes catch it. So this is just my setup. I'm just showing you guys how I get the insight. All right, because I could be doing other things here besides trading the markets, but I always have it up so I can see it, and so I catch it first. So I'm seeing it flashing crazy. I know something is wrong. So the key things I pay attention to is the S&P 500, which is this one, the NASDAQ, okay, the Russell, and then the Dow. These are the Dow minis, all right? So those are the key things that I'm really paying attention to at all times, all right? As you guys see right now, they're all green, but they're in a mild range, okay? Now, one of the biggest things that I really like to look at, and it's so easy to just tell, is the NASDAQ, okay? So the NASDAQ is this one right here in the middle. I'm going to just color all of this. All right, this one right here in the middle. So this is the one I'm really paying attention to. Tech really, leads the markets. Okay, most of the growth that we have is coming from technology stocks. So anyway, this numbers here grow really big. All right. So the way that I like to gauge this, Kareem, are you on your phone? Let me know if you're on the phone. Can you guys see the screen? Anybody else having issues with seeing the screen? Kareem, are you on the phone or are you on a computer? Let me know so we can get you straight. What's good, Laquan? Anybody on Facebook that I didn't recognize? I see you guys. Thank you. Make sure y'all hit that like button and share also. Okay. All right. You may need to jump in on the because we're live right now, so I can't really troubleshoot it with you. If anybody can assist him in the chat, let him know other ways. Maybe you can join on the Facebook. If you're on Facebook, you can join from Facebook side. If you have the app, you can download the app and you can actually see it on your phone as well. Or you can just jump out of the chat and get back in. So that's another way that you could do, okay? So anyhow, so what I'm showing you guys right here now is the NASDAQ. Easy way I tell, I get a little insight of what's going to happen the next day as I'm looking at the NASDAQ overnight, okay? So this is right now, okay? This is not live with us, but this is, around the world, they trade in the futures. So the NASDAQ, which is this /NQ, okay? So the way I look at that is anything under 50 is pretty normal, okay? Anything under 50 is 0 to 50, I should say. So we don't want to go negative, right? So positive, 50, that's pretty normal, right? Anytime we get over 50, okay, that means really good things are happening. You don't have to know the story, just know that something positive is going on. Okay, so when you see these numbers going above 50, all right, that means that something really, really good is happening. Okay, if it gets above 100, I mean, wow, straight up looking for gap ups. All right, straight up looking for straight positive trades, looking for, bullish trades. All right, so this is an easy way to just quick shoot. You want to be able to quickly open up your platform, look and see what's going on. All right, so this is a quick way I'm looking at it. All right, so anyway, so I'm gauging around 50. Okay. Anything above that is great. Now, anything less than, okay, you got less than 0. That means that, okay, that's down. So this green bar turns red. All right, that turns red when it's negative. All right. So once it gets negative 50, this is not good. Okay, negative 50 is not good. This is normally something that will indicate that the market is going to open up down the next day. And anything, greater than, or I should say more or less than 50, the markets normally won't recover from overnight. Okay, follow me because it's going to make sense on what happened over the week. Okay, so anything that's negative, above negative 50, all right, let's just say negative in here. All right, anything above negative 50 or below negative 50, I should say, it's really bad. Okay, if it goes over to 100, it's terrible. Okay, terrible, terrible. It doesn't matter what you're trading. I get out of it. All right, because whatever's going on, this is not good. This is going to be a strong gap down. Okay, negative 100, and this is like overnight. All right, so this is like if we see this overnight, right? Then the next day is going to be effed up. All right. And normally I haven't, to be honest, I haven't seen a time where it was negative 100 or greater, okay, the night before and recover the next day. Never seen that. Anybody seen that before? If you guys watch this, I don't know if you even watched it or not, but I've been doing this for a couple of years now, all right? And anything, less than negative 100 the night before, the markets does not recover the next day. All right. So, and mainstream knows this. Everybody on Wall Street knows like that's just not good. So that's what actually happened. I believe that was on Monday night or whatever. And so that's what actually happened. The markets went down. The NASDAQ was down over, 100. I think it was like 130, negative 130 something points. And I was like, whoa, this is just not good. I mean, I saw it once it hit 50 and once it hit 80, I was like, nah, this is not good. And then it hit 100. I was like, okay, now that's conviction. That's really bad. And you go look at the news afterwards, right? Because I see the numbers first and then I see the news. I'm like, oh, the Iran, they retaliated. I kind of figured already because that's what happened, a couple of days prior. So kind of figured that was going to happen anyway. So it was greater than negative 100. I was like, wow, this is just really not good. And the next day, anybody see the markets pop up and then you get, the pop up. Okay. Never seen that happen. All right. Now, all the news, everybody was rushing to get the news out that, hey, this is bad for the markets, buy gold and do all this other stuff. Right. But everybody got whipsawed out. All right. Because this never happens this way. All right. But that blueprint that I just showed you guys, that works. This is the only time that I've never seen it work. OK, but it works. I'm going to continue to do that. That's to give you some insights on how you can actually gauge the markets. If you're doing your game plan, how we're doing right now, the next day, you want to have some insight. This is a good place to look into the futures market. So that's the futures that we're looking at right now. They're trading pretty normal. You see, this is not a lot of flashing. This is all normal. OK, so this is positive. The markets are more than likely to open up positive tomorrow. We don't really know because anything can happen overnight. But as of right now, things are looking, pretty kosher. All right. So anyhow, with that being said, that's what happened. The markets end up ripping the other direction. Okay, so the markets end up ripping the other direction, hitting these new highs. And I'm on a weekly chart here. Let me actually go to my daily chart so you guys get a little more into this. Here we go. Here we go. Here we go. I'm gonna try to adjust it so you guys on the Facebook side can actually can see that. All right, I'm gonna drop it down some right there. All right, so there you go. There you have this rip. Now you see my Fibonacci levels are already there. I haven't even replaced it. That's a significant floor level. We teach you guys how to use these tools in the class, and you get to see me use it. So you know how to use it. You see your colleagues using it, blah, blah, blah. Anyway, it works. So that gap down, you see it ripped all the way down. All right, boom. That was the bounce play. Bingo. And then it hit this Fibonacci extension. I'm not a genie. I'm not a magician. The Fibonacci just works. And when I first started trading, I'm going to tell you right now, there were a lot of people that were so skeptical about using the Fibonacci, all these Reddit articles. Stop believing this that you see online, okay? Like, stop believing everything you see. You see this being used every freaking week. I use this. You guys see it. You know it works like clockwork. Why it works, I don't know, but it works, okay? Fibonacci levels, it's a certain way that we use it that's different from everybody else. I learned from the best, and I'm teaching you guys. So that's what happened. It hit that floor. It popped all the way up to this high, hit a new record high. So after the whole situation with the war, you got to remember, the Iranians said they got their revenge, but there was no bloodshed. We took blood. We took lives. They took no lives. In fact, they took their own lives and killed, they dropped the missile into a plane and they killed over 80 of their own citizens. So you guys tell me in the chat, all right? You tell me in the comments, how is that revenge by killing your own people? Who write these scripts? That's my little hashtag, right? When stuff don't make sense, I'm always asking, who write the scripts? Who's writing this script? Because it doesn't make any sense. Now, it makes sense if you retaliate and there's bloodshed from Americans. Quite obviously, that's the way that it should go. That didn't happen. And so they said that they were finished. OK, And then Trump didn't come back and retaliate. And that's what the markets, that's what this whole move was about. All right. The drop was the retaliation. The next day, it was about this pop off because Trump decided that he was not going to retaliate with bloodshed, right? No war, because everything all over the timelines was World War III. All right. That's what we're expecting. All right. That did not happen. Trump played it. You know, he like, hey, man, we done took out your big dog. You feel me? But the Iranians didn't get nothing. All right. So just keep that in mind, because that's important to understand about risk in the future. OK, so that never happened. But Trump did slap sanctions on him. So Trump still has the upper hand. Right. And the U.S., of course, we're big dog, big bully, I guess. But Iran has, backup with China and Russia. And so that can be, again, why people are speculating about this World War III situation. Anyhow, so they killed their own people and they said that they had revenge and that's it. All right. To me, that doesn't make sense. It's a smokescreen for a bigger play in the future. OK, now, they obviously said that they do not want to take out American citizens. They just want American leadership. I don't even know if that's even a possibility, but somebody got to die. I mean, that's just the way it is. You guys know the rules of war. We got a lot of veterans that's in here. Any veterans in here, hit the thumbs up if you're a vet in the comments. Hit a thumb up. Let me know that you're a vet because you understand the rules of war. OK, the art of war. If you ever read that book, Sun Tzu, get it. It's a really great book. But this is war games. This is the games that men play, especially men with power. Men with no power don't really, do this. But men with power, they play these games. So just understand that Iran presents a risk to the markets, and it's a dangerous risk because it can't be calculated. OK, we can calculate things like the yield curve. We can calculate economics and stuff like that. But you can't really calculate, this kind of scenario. You really can't calculate it. So this is a risk that will catch you with your pants down while you're celebrating all these euphoric highs. The market's drifting and continue this melt up. And then when they do strike, there's going to be bloodshed. Don't know when it's going to happen or how it's going to happen, but it's going to be bloodshed. And when that happens, you're going to see this drop drastically. All right, KB. Okay, Marinko. Okay, hoorah. That's what I'm talking about, my man. Or it's old men talking and young men dying. That's right. Yeah, nobody wins in war, okay? Nobody wins in war. But check out the story. Who wants to take over a country that's in a war, right? Normally, the wartime presidents, they maintain, okay? So war might be good for a Trump 2020 presidency. Think about the script in this movie, okay? Just think about it like a movie, okay? Nobody wants to take over that. So that pretty much gives him the 2020 election again. If it happens, okay? So I still think that goes in his favor. Either way, he still get the bragging rights that he took out a top general who was getting ready to kill American people. And that's going to go on his resume for election, which is this year. It's going to make him look even better. At the same time, the markets totally support Trump. They're saying all of this is because of Trump. So understand Wall Street is behind Trump 100% of the way. All right. Because he still got favors to do for them, for the corporations. All right. He's only done 4 years. So just keep that in mind. So anyhow, that's the risk, the geopolitical risk that we have with Iran. OK, you got to remember, I'm just giving you guys this for future tense. We can always go back and replay this video. And I can say, I told you so. I told you this, that, and the third. Nobody knows. But this is chess. And we have to make calculated risk. We have to make, these decisions. Your money is in place in the markets. And it's important that you understand. I know a lot of people out here day trading, penny stocks and all this other crap they talking about. Follow my cues, follow this, that, and the third. But you need to understand what's going on in the macro view. So we always take that top down approach and then we dial in so that we can actually get some plays from that. So anyhow, I just want to give you guys that scoop. So with that being said, that's what we got on that side from the geopolitical side. All right. So let me see if I can pull up some other data points, because we did get some data points last week. Last week, we did get the ISM numbers. Let me show you guys this because you guys see the headlines. You see the headlines print. I track this data and stuff like that. Excuse me. I track the data. The data, most people do not understand. I have a data science certification. I went and studied and, it's complicated. I definitely understand. But I would tell you this, a good takeaway is that the data itself is not all linear. The data is dimensional. Let's say data is like 3-dimensional. So many ways to take a look at it. Most people think, oh, the numbers are the numbers. Oh, the numbers don't lie. However they want to say that phrase. The numbers can be manipulated, okay? And it's based off of how they're being presented, okay? It could be details left out of the numbers. And in data science, I learned that there's two disciplines when I was, doing my data science classes. There's two different disciplines. Okay, you have certain data scientists, they want to know the why. Why are the numbers the way they are? And then you have the other groups of data scientists, people that says, we don't give a damn why they are. This is what they are, and we're going to make decisions based off of that. Other one, they want to know the why. So it's like different disciplines. And so you get the same thing from this. You make decisions based off of, why is it the way they are, or, this is what they are, and this is what we're going to do. Okay. So anyhow, we got the ISM numbers last week. In fact, let me see if I can pull up. I really want you guys to see this. I know we're going to take a little longer time than I originally thought that we were going to, because I'm being a little talkative here because I'm teaching. You guys know I like teaching. If you stay around me long enough, you get a lot of this wisdom for free. Y'all know that's true, right? Anyway, by the way, y'all like my money green shirt? Y'all like the money green sweater? This is the new Take Profits Often, okay? Link is in the bio. If you want to get your hands on that, it's in the bio. Make sure you click that. Okay. Cool beans. All right. So I got the ISM numbers up, but again, if you guys want to get your hands on that, because I'm looking clean in the money green, you feel me? I got the money green popping. This is that motivation. All right. Wallstreet Jackboyz, our own style, our own swag. We do it. You got the blue, Ron? You got to post a pic. You got to send a pic. I got to see that. You got the blue. I went with the money green. I don't never wear green, but I was like, hey, let's go get the money. You feel me? Take profits often. That's one of our biggest mottos in our group. We take profits. Go ahead and realize those gains. You feel me? So anyhow, let me show you guys the PMI numbers real quick on this. I'm going to try to speed through it real quick. All right. So this is what's important to understand. PMI numbers, Purchase and Manufacturing Index. This is the corporations, the manufacturing sector. Those people, if you work in manufacturing, this is important for you to know because you get to understand what's going on in your industry. So before they come out and start laying you off, you kind of already know in advance that they're getting ready to lay you off. So maybe you're already actively looking in the markets. This is value for you guys, even if you don't trade. All right. So key thing to look at on this chart right here, this PMI number. Okay. The key thing is this red line. This red line is 50. This is the benchmark. Anything over 50 represents expansion. Anything under 50 represents contraction. Okay. Contraction means, slowdown or recession. Okay. So anyhow, we've been under 50 for, I want to say, was it 5 months or so? Yes. 5 months now. We've been under 50. Okay. But this is not good in the manufacturing sector. Okay. But you got to remember, majority of our economy is service now. It's no longer manufacturing because we sold that over to China. All right. And this is important to understand with the job numbers. We're going to go over here in a second because you got to understand why manufacturing is important, especially to men. Okay. Men like to work with their hands. Remember that we're men. All right. We don't like serving people. Okay. Most of the time it's just, this is just true. Women, they normally do the servicing jobs. Men, they like to, hey, let me throw the blocks and bricks around. Let me throw this. Let me get on the truck. Let me do all of that. You feel me? That's the way we are. So this is important to understand. We've been in this recession level here since last year. All right. This is not good. This is an economic indicator that gives insight in the future. So that's not good under 50. That's what showed up. And I want you guys to see this for yourself. All right. So this is why I'm showing you this. I'm going to try to quickly go through it. This is the report right here. If you guys want to take a look at that yourself. And in fact, I will drop a link here so you guys, if you want to, take a look at it, bookmark it yourself. I'm only one man. I can't cover it all, but I try my best to do as much as I possibly can. This is important data that gives us insight because this is the top dogs who are manufacturing telling you what they are experiencing in this space. All right. So again, these are the CEOs of these companies, and this is what they're saying. Now, I'm gonna just quickly go through this because I really want you to see it. This is not me saying it. This is what they're saying. This indicator is important because it's telling you what's good, Topaz. This indicator is important because it's telling you that these companies, they're ordering more raw goods or they're ordering less raw goods. Why is that important? Because if you're selling more, you quite naturally order more, okay? Because you're gonna need raw goods so that you can make all your little devices. What I'm making glass, I need the sand, I need all this stuff, the raw material to make whatever it is that I'm making. What we're looking at is their orders. Are they ordering more or are they ordering less? This gives us insight into the future, okay? What is to be expected in the economy? When they order less, is because they're not selling as much, or there's all kind of, drama or trauma in their space. So I'm gonna let you guys hear from them here. Quickly go through. This is what they're saying. All right, backlog of orders is shrinking due to new order pace continuing to fall. That's actually giving you a demonstration of demand. Okay, demand is falling. Demand is important because economics is about supply and demand. Due to sluggish sales, we have introduced promotions to generate increased sales. They're actually trying to, they're cutting prices, whatever they can to try to get new sales. Okay, and they're in the chemical product sector. Cautiously optimistic is the rule these days. Sales are decent, shaky, but we're wondering what 2020 will bring. Uncertainty. They don't know. So they're still hedging that it will be successful, but maybe not as much as this year. That's them trying to be optimistic. If you guys ever work in corporate world, you can't say anything negative or they're liable to fire you. Okay. And even if it's real, they view real as negative. It's like, no, dickhead, it's real. Like, this is what the numbers are. And we got to make decisions based off of that. They're either good or they're bad. Okay. That's as simple as it is. There's no, that's positive or that's negative. No, I mean, the data is negative. Okay. We got to do something different. Or there's something, you got to do something different. So it is what it is. This one here says, starting to see suppliers try to pass on costs associated with tariffs. Uncertainty on the trade front continues to keep agricultural markets on the defense. This is in the food, beverage, and tobacco products sector. Now, they said that they're actually passing those costs on from the tariff. So that's actually another risk, the tariff situation. And then down month to month, but up over last year. So they're still down. Okay, this is what they're saying. Anticipated large export orders that did not materialize. As a result, expected U.S. production has decreased. This is in the fabricated metal products. Dealer inventories have rebounded and overall customer market has softened, resulting in correction to near-term production schedules and a tentative forecast outlook. All right, so they say they rebounded in this sector. This is machinery, so slightly positive, right? We can just call it positive, all right? So one positive. Export market continues to weaken for plastic resins. Is weakening. Okay. Mexican producers are actually trying to sell products back into the U.S. due to weak in-country demand, which is interesting. If you look at all the currencies for the year, the only one that's actually doing good is the Mexican peso. That's interesting. I'm just kind of putting it together. This is live, you guys. So anyhow, they said Mexican producers, they're actually trying to sell this back to the U.S. because, the export markets are continuing to weaken. That's crazy. So for our outlook for the first quarter 2020 is positive. This is somebody in the textile. They're trying to be positive, which is great. I feel you're trying to be positive. That's okay. We have secure contracts from a number of former customers, and expected sales growth of about 5% over quarter four. Now, that's their expectations. Reality is going to be a different scenario. The construction market seems to have slowed for end of year. Overall, it's marginally up. Okay. So you guys heard it right there. That's directly from all these CEOs. They're telling you this is not good. All right. It's bad all the way you put it. Okay. I showed you guys a chart. So now you understand how to interpret this thing. Okay. This is what comes out every month. All right. So I just want you guys to see that. I don't think I was showing you that before. I posted a link so you guys can share it. But let me know in the comments, what did you gather from what you're seeing from the PMI number, from the participants that takes that survey? These are all the top guys in the industry. They're taking this survey and they're giving you all that insight. You can hear it directly from them. You guys don't have to take a look at it. I do because I'm a nerd, but it is what it is. The more the merrier. All right. So back to where were we? Okay. So what happened over the week? Okay, cool. PMI numbers came out and that was negative. Now the market should have continued to sell off now. That should have sold off. But you saw we hit new highs. Okay. But there's no fundamental reason why we hit new highs. Just the fact that Trump decided to not, blow Iran off the map of the earth, I guess so. But what was happening underlying, these numbers are terrible. You can see it right here yourself on the PMI numbers. It's terrible. It's all under 50. That's recession levels. All right, cool. So then we also got the job reports back. Okay, so job numbers came back. I think there was an estimation of about 158. Somebody correct me if I'm right or wrong. I think it was about 158,000. Was the expected numbers. Somewhere about 160,000 jobs is what Wall Street was expecting. This is what actually printed 145. All right. Make sure y'all hit that share button on Facebook side, man. Share this. All right. So 145,000 jobs came out. We missed expectations. this is bad. Okay, normally the markets to sell off. That's that's happening. Now you got to remember this is just the front prints. They also do revisions over months. Okay, they haven't even done a first revision, and we saw the manipulation that they did last quarter. They actually revised these numbers upwards. They revised all these numbers up. Okay, and they normally don't revise them up. There's always a revision down normally, but I think they did revise this one down since we got this new print here. But as you guys can see, jobs growth. Wall Street is celebrating that the fact that we generated 145,000 jobs. Now, the numbers are three-dimensional. They have so many layers to these numbers. So it's like, what kind of jobs are they? How much are these jobs paying? Like, that's where the three-dimension comes in at. Okay. Also, in the report, there was a headline about in these jobs growth that more women are working than men, which is crazy, right? And I've been telling you guys, there was an article that came out a couple of years back, and it was talking about the divorce rates here in America. I posted this on my page, but you guys let me know how you feel about it. Again, these numbers are not just economic, just not data. They have social impacts in the marketplace. The marketplace is a free will matrix, okay? And everybody's all about controlling the mind, controlling and influencing the brain so that you can do the things that they want you to do. That's why people spend billions of dollars on advertising to you so they can get you to prompt you to do things. It's still free will. Nobody's holding a gun to your head. You're going to sell stocks. You're going to buy gold. You're going to do all these things. That's up to you. But they know finance and money it's not just money. It's about psychology. So just understand that. Anyhow, more women are working than men. All right. There was a report that came out a couple of years ago. It was talking about the divorce rates of being really high. And the men are complaining. They had a survey that a lot of men are saying that they don't make the money that they used to make. This is important to understand. Okay. Because it's happening in real time. Men are not making enough money and women are making more money. Why? I just showed you guys, America is a service economy. Okay. You got to remember, we are now service. Do men like to serve? No. Women, I don't know if they like to serve or not, but that's what they normally do. Okay. Servicing economy, performance services. Okay. You're performing service, whether you're working at a restaurant and you're a waitress, you're taking tips, or you're a dancer, like you're serving people. Okay. Production is what men like to do. We like to produce. Okay. We like to make ish. All right. So that's why it was important that we look at these PMI numbers here, because you see what's happening in that sector where men normally will work and normally occupy and make good money so they can actually be the king of their household, and their women respect them, but when you have the woman makes more money than the man now, this is what was said in the survey that they conducted, that the men were saying they don't make the money they used to make, and they said that is the cause of their divorces. So divorce rates are really high. There's a social impact that's derived from the economy itself. Okay. And so they normally don't know the impacts of these things in the social space until years later. And they go back and do the research and they say, okay, well, we sent all these jobs over to China so we can get cheaper goods. But what happened? We end up firing and laying off all these people. And who were those people? Those were men that used to make good money. They no longer can make money because they're having a hard time trying to transition into this service economy. Because again, men are just not wired to, what is it like being a nurse? How many men do you know that's nurses? It's like, when a white poop for somebody's ass, like that's not stuff that men normally like to do. Okay. I used to do brick mason work, one of my first jobs. That should make a man out of you. Feel me? I felt proud every day coming home dirty with mud on. I'm like, yeah, man, the ladies love me because I look like a hard working man. I don't have no facial hair. Still to this day, I don't, but I work hard. You feel me? But that's the way most men like to work. All right. So producing things. So that's important to understand the social impacts of this. The job numbers are down. Men are not, again, not in the workplaces, having a hard time. Some men are not good talking on the phones and stuff, doing customer service work. But women, they do an outstanding job with that. I'd rather talk to a woman all day, every day. Like they're just so therapeutic versus me talking to who we got over here. Me talking to Ron over here, and Ron gonna be over there busting me in the head like, yo, you shouldn't have did it that way. Like we too hardcore. Women are like, oh, it's okay. It's that. You want to talk to, you want to talk to a woman, right? Most people do. Nothing wrong with that. That's just the reality. This is observing what's real. So anyhow, in these job numbers, these are low paying jobs that were produced. And also you got to remember that the wages have not grown. Let me show you guys the wages in this also. This is more of an economic session we got here. All right. So the wages, again, they're pretty much flat across the board. When you do the cancellations and stuff like that, when we factor in the ups and the downs, it's pretty much sideways. So wage growth have not gone anywhere. All right. Wall Street is celebrating that more jobs have been added, okay, but your wages have not gone up. Why is that important? Because there's a certain thing called inflation. Inflation eats away the value of your dollar. That's one of the keys to investing that I don't think nobody else will tell you, but you got to understand inflation, and you have to work to beat inflation every time. Inflation. Now, who's the enemy of inflation? Gold. Gold. That's why gold is important. They don't teach you all this stuff in the financial school. So even if you got a Series 7, I don't care. You don't even know this stuff. You can still come here and get this wisdom. So gold is the counterpart to inflation. That's why you see people buying so much gold, because the Fed start to print more money. That means there's more supply of money in the system. When people get more money, what do? Spend. They spend more money. They bid the prices of your houses. Okay, I got people down in Texas complaining about the housing market, the prices going up, and those houses in Texas are beautiful and they're dirt cheap. But you get the New Yorkers and everybody from up north will come down and buy those houses because they're cheap. All right. And then they start to rise up, and then it's too expensive for people to live. This happens all throughout the country. All right. So, but this is the free will. Okay. It's all about the free will, but we all play a part in this. So anyway, I just want to show you that the wages are stagnant. They're not growing. We're at historic lows for the unemployment rate. You see Trump and everybody bragging about this. Okay. I don't believe that we can get any lower. Okay. This is over 50-year low to this low. Okay. Unemployment rates are that low. The numbers are fake anyway. Okay. Because they don't count certain people that did not apply for jobs after a certain amount of time. Was it 90 days or so? They don't even count in these numbers, but just based off the numbers that they count, this is what we have. Okay. But the numbers are still not one dimensional. You have people that's working multiple jobs here because they're not making enough money. And then a lot of these jobs also are temporary jobs from the federal government for the Census Bureau. Okay. But the Census Bureau conducting their census, they hire a lot of people for that until February. So next month, it's going to be interesting to see those jobs go away. But that's what's all into these numbers here. And I believe that was like, I don't even remember, over 60,000 jobs a day that they added to that. But that's federal jobs. Okay. The market is not producing anything. Okay. Anyway, I just want you guys to see where we are in this economic cycle here, because we're at the beginning of the month. We're in the beginning of the year 2020. And, just give you guys a little shape up here real quick. I'll cover one more thing and then we'll get to what we have to go through. We do get the inflation numbers coming up this week. Index performance. Let's see. We are S&P up slightly, 0.2% for the year. All right, boom. NASDAQ is riding the show. The Dow, this is the Russell is down. Okay, the Dow is also down. Anyway, it's not showing because I don't have the chart zoomed out. But you see, that's where the strength is at with that. What else do I have in this chart? I got all kind of goodies in here. All right, so gold, look at gold, okay? This is for the year. This is just for the year 2020. We just started. So this is what you needed to see what we got here. Now, gold is outperforming the markets, okay? I just told you guys, what is the enemy of inflation? The enemy of inflation is, can somebody type it in the queues? Type it in the queue. What's the enemy of inflation? Okay. It is gold. Okay. So when inflation rises, people want to protect, they want to hedge. And so they buy gold. Smart money. This is what smart money does. They buy gold. Okay. And so with the Feds pumping so much money in the markets right now, that creates all this extra supply of money is getting into the system. More spending happens, inflation goes up. Feds, they got this 2% target. They haven't been able to reach it. It's like it's fucking dead. And if inflation is dead, then the markets is doing what they do. It's there. They're just not tracking it. And they're not picking it up with what they're looking at. But inflation is well over 2%. Trust me. So anyway, you see gold go up. So gold, I think this is going to be another good year, another great year for gold. And palladium is out of here. It's been out of here. It's the same way it was like the number one, I think, last year also. It was crazy. Oil got smacked up. It was a sell-off because people started to plow into oil from the Iran situation. It's more sanctions slapped on and everything. But I guess because they said that they were finished and they got their revenge, then everybody sold off in oil. It's going to be an interesting story this year. All right, cool. And that's the Forex side. I was showing you guys the Mexican pesos were leading the show. Anyhow, I just want to give you guys that top-down approach. Normally, these sessions are going to be much shorter, but I had a lot that I wanted to cover you guys and build a basis here. Okay. So with that being said, markets are up. We're taking a look here at the S&P 500. We have tagged this extension here. the market does like whole numbers, okay? The market's like these whole numbers. You get to the 3,000 level here, right? Okay, this is just, years of just knowing the markets. The market like that 3,000 numbers. They like that 3,100 number. They like that 3,200 number. And they also are going to like this 3,300 number. So I do have some Fibonacci targets that's close enough. I got 3,285 here. You can round it up to 3,300. That's where the markets would like to go. Markets would like to go to 3,300. So that means that we may get a pierce pop through that extension. But understand that the markets overall are extended. So buying at these highs is reckless, okay? Because when fear hits, it's not going to be good. All right. But the oversold, overbought territory that we're looking at here, as you guys can see, sometimes the market just don't give a damn. All right. So there's no golden indicator, but we take a look at it and you don't want to ignore certain things. Okay. I think it was back in 2018, the markets did the same thing where it was in the trading in the overbought territory for like, eons, and it just never got that sell off, kind of like what it did back here. It's like, oh, pushing up, like people are still buying, pushing the price up. That's ridiculous, right? Same thing here. Okay. And so we see that it came down a little bit, and that was just a buy point. All they wanted to do is get this at this level so they can sell it off at this level. All right. And so I think that we can probably hit up here that 3,300 target. That'd be another bragging right for Trump. And then, we get another sell off. So that's what I'm looking at overall in the markets. We could go through this again. It doesn't really matter at this point because the Feds is printing money. Now, you guys seen the repo markets situation? Anybody even understand that? In fact, there's many people that don't understand the repo markets. People that work in the financial sector don't even understand the repo market. This happened way back last year, September. And this is why the markets are drifting. Like, they're freaking drifting, okay? Like, bingo, okay? You see that September? Bing. All right. The financials, the banks basically ran out of money. Feds came in and pumped in. I think they're pumping in like $60 billion a month into the system. And they're supposed to be doing this until like February, I believe. So we'll see how that plays out, see if they can move themselves out. But as they've been pumping money, the supply of money, okay, the markets have been drifting high. The economy, we just showed you guys, is weak, okay? But the financial and the stock market is getting pumped up. This is how you get the wealth gap. Okay, we wrote an article about it a long time ago. I know you guys don't like reading. That's why I'm trying to get you guys some videos. But if you go back and read those articles, you'll see. Okay, if you do want me to write something, just let me know. We'll write it. But I don't see any demand for it, so I'm kind of slowing off on that. So yeah, repo signs, more debt, more repo signs, more debt. Yeah, that's what Dustin's saying. So yeah, debt is a major risk also. Because that money is out there and those banks, those institutions, they got to get it out. But they ran out of money, basically. The Feds had to come in and save the day. This is underlying. This is happening that people don't see. It's not in the headlines because many people do not understand this. I'm going to make it short, brief, and simple. The repo situation, just think about it like a pawn shop. I don't know if you've been to a pawn shop lately. I haven't, but I've been there before. People go to the pawn shops because you're trying to, I think that they're trying to, you're trying to raise cash. Okay. It's like, oh, I got I don't know. You got a freaking thing. I want to pawn this. Okay. So, hey, Ron, I got this glass. I want to pawn it because I'm strapped for cash. I need some cash. I don't have cash. It's a fast way for me to go and get some cash is go to the pawn shop. This is the same way for the banks. It's the repo market, right? So they go in and then I basically pawn this. Okay. And then you give me cash. You give me cash. I got money on hand. And then the goal is for me to come back and buy that back from you at a later time. Maybe I got a 7-day hold on it. And if I don't come back and pick it up, then you just go sell it to somebody else. That's the way like it normally works. Repo market works the same way. It's for dealing with treasuries. And so anyhow, they're supposed to come back and buy these things back after they get the monies. It's been a nightmare. Interest rates were like we're at like 1.5% right now. Just think about it. Back here, they spiked up to like 10% overnight. It crashed basically. 10% interest. Okay, they had to fix it, so they printed all this money and threw it in the markets to fix it. Okay, now this is after the yield curve. All right, the yield curve inversion. All right, so after the Fed started pumping money, you guys noticed that the yield curve popped out of its inversion. Anybody seen the yield curve tracker lately? I'll pull it up for you guys just so you can see it real quick. I got one. I should have dropped the link in there for you guys. I got so many devices that we make, but I actually man all this freaking data. What is it? There we go. But this is on the website. I'll drop a link so you guys can see it. And it's interactive, so you can actually just take a look at certain things. I'm gonna just quickly take a look at it because we don't have time. I know we're running out of time. Running out of time. So anyway, this is the yield curve tracker. It is on the website. You can use it anytime you want. You can go in here, change these numbers, stuff like that. I got two different views because most people don't really understand how to read this stuff. So anyway, I got it here from February last year. So this is a year-to-date tracker. If you take a look at the yield curve, the gray line is supposed to be under the blue line. Okay, so we got the gray line to pop above that line. That was the yield curve inversion way back in March. We got it way back here, and there was the first inversion was here, but that wasn't sustained. It popped out, and then back here in May, it held for the whole year until October. Okay, so and then it pops out, and now it's supposed to be normal. So this is the normal yield curve. It's this shape here. So that's what you're looking at. All right, and this is as of January 10. This is up to date. So this became back normal. The yield curve itself indicates in the future there's going to be a recession. It's like the most, the most reliable indicator for a recession. Okay, it doesn't mean it's going to happen today, tomorrow. We talked about this last year, but it is coming because that inverted. That's giving you the heads up. Now it popped out here, showing you guys October. We just saw the charts where the Feds pump money in the markets. There you go, scenario fixed. But it create other issues. Okay. So all of this is happening right now under your toes, and most people don't understand what's going on. Anyhow, I'll drop that link in here for you guys also, and you can bookmark these. I try my best to update these things here. You can check different yields if you want. I normally check the 3-month, 10-year, but you can do the 2-year, 10-year, whatever ones you want. All right. So anyhow, I just wanted to show you guys that, but that's where we are with that. Okay. So I've done enough talking. Let me get some feedback from you guys. I normally go over some setups, but I'll take some things from you guys. First on the list is Dustin. I know he reported something in the group, and he's on a train ride joining us today. So shout out to Dustin for hanging in there and still showing up to Game Plan Sundays. So this is the ticket that you want to look at. You guys drop in the queue what stocks you want to look at. We'll take a look at those quickly. Okay, so this is one of those penny stocks. Okay, so this is an interesting one. And Topaz, she's the penny stock queen over here. But she would definitely give you insight on this one. Now, just taking a look at it, though, because, again, all of our setups don't really work on penny stocks. But using my assessment, we'll take a look here at this penny stock. So I'm just taking my Fibonacci tool from this mountain high to this valley low. This is the lowest peak here. So I'll take a look at it from that perspective. And we do have this basically a $7 target. This stock definitely wants to hit $7. It was in an extended squeeze, which is here. Let me change my thing here. All right. So we do have the trend that's going up. We got the squeeze firing long. And the stochastics is starting to turn up. This is the major one. Now the faster stochastics is turning downward. As you can see there, the fast one is the skinny lines. So you get that little, that pop, and then it starts to come down a little bit. The buy trigger was here. Okay, this is the buy trigger. I got 2 buy triggers here. So ideally, when this squeeze, you want to get into the squeeze before it pops off. You don't want to get in at these tops. You got to get in the moves before everybody see it. Most people see the reaction, the chain reaction. They want to get in, and then, you're just getting sold bags. Okay, so the bag is getting pushed off to you. The long squeeze, you didn't notice long squeeze. Okay, yeah. So the bag is getting sold off to you, and they taking their profits and they up out of there. Okay. Let me just see if I can. But again, ideally, what you want to do is get into the move at the squeeze. When you saw it, it pretty much held at this 100 moving average. We saw this as a significant key point that holds. It's only breached that a couple of times, but it's always snapped back, and that became the ceiling. So the 100, the moving average, and again, this is my favorite indicator. If I could trade only one indicator, okay. One indicator, it would be my moving averages. If you took away everything, it'd be the moving averages. I know the moving averages. My moving average setup, the elite moving average setup that we have, you guys get this whole setup with the Wallstreet Jackboyz Masterclass. It's in there, okay? But this thing right here, it works, okay? Anyhow, even if I didn't have the Fibonacci, if I only had one indicator, it would be this one here. If you guys got any favorite indicators, drop it in the queue. I want to hear what's your favorite indicator, but this is mine. I'll show you how. Show you why. All right. So the tops here, you see it held. This is letting us know this is a significant area. And so basically, that's what happened. It held there, shook out the shorts here with that sell trigger because it was not enough to push it down. It held, even though it got that trigger, it held. But so then you end up getting a reversal. We got a strong trigger here based on the stochastic side, and here on the on that indicator there. So we got that move, and bingo, it shot through the moon. That move has already came and is gone by because people started selling off here. Now, is there still more in the tank? Yes, it could be. But again, these are penny stocks. Not our specialty. We normally do the blue chip stocks because they have certain behaviors that we can identify and we know how they trade. You know, Tesla is very volatile. You know, Amazon is volatile. You know, these stocks, they move on average 20 points, 30 points. Okay. And you know, other stocks like Microsoft, they don't move as much. You can predict it more. Stocks like Facebook, they can move, you know, they move different than other stocks. So anyhow, that's important to know. Anybody else got anything else you want to look at? I have exceeded our time limit here. I do apologize, but yeah. Okay. All right. So with that being said, let me actually just quickly recap on what we have coming up. So earnings is kicking off this week. Earnings is kicking off this week with the financials. And so I think it's Monday. No, nothing on Monday, but Tuesday we have Citi, JP Morgan, Wells Fargo. We have those stocks that are reporting earnings. And so this whole week is going to be earnings from the financial stocks. So the financial sector is going to be key to watch to see how they perform. We already know they got help from the feds, but we really want to see how they're performing. And they always kick off earnings. So we want to kind of pay attention to the financials to see how they're performing. And this starts on Tuesday. We also get the CPI numbers, which is the inflation numbers that we're talking about. We do have those coming in on Tuesday also. We understand that the markets are expecting about a 2.3% rise. Then we have to see how that plays out. Wednesday, we get more financials. We got Bank of America. We got BlackRock, Goldman Sachs, U.S. Bancorp, some other names that's out there. And then we also got United Healthcare from the healthcare sector that's reporting on Wednesday. The PPI numbers come out also. Many people don't really pay attention to it. It's really not that significant, but it's there. It's going to be reporting. And then Thursday, we got the Bank of New York Mellon, Morgan Stanley, a couple other smaller names. So it starts to kind of die down a little bit as we approach the end of the week. We got Citi that's coming out. We got JP Hunt. We got Schlumberger. We got State Street. That's on Friday. Now, remember on the 15th, another key risk that we're anticipating is the trade deal supposed to be signed and final on the 15th this month. So the 15th, I believe, was that Wednesday. Let's see. Pull up that calendar. 15th. All right, bingo. So that's Wednesday. So Wednesday, the trade deal is supposed to be in writing, not the whole trade deal. You remember, this is just phase one of the trade deal. Phase one trade deal supposed to be signed on Wednesday. Now, if that doesn't happen, you're going to get a sell-off. If that does happen, the market is going to hit those new highs we're talking about, and more than likely, blow through those levels. So more than likely, I'm looking more towards the long direction this week. But that's basically what we have in the pipeline here. One last one for my man Dustin, TTWO, Take-Two Interactive. This is a video game company. They make Fortnite. I've been popping. As you guys can see, the squeeze just fired off. So it looks like we're a little late to the rally. Let me actually go back on a weekly and see. Oh, okay. So not quite. So this thing is still popping because we had to take a step back at the weekly. And I actually like this setup for a long term. Now, you got to keep in mind certain risk is earnings up ahead. Now, it looks like the market's just, basically betting on that they've had a pretty good fourth quarter. And I'm pretty sure they probably did. It was Christmas. Most people buying for their kids. It's probably a good move going in. I think they're getting their risk in there right now, putting risk on for that event. We have a squeeze that's in there. Good eyes, Dustin. This is a weekly squeeze. We've got the trend that's shifting upwards. This one here is also, pretty steady. You can easily look at this bounce play right off the moving average. Okay, this is right off the 50 moving average. That point right there, we see it come down, boom, like a bounce pass. If you play basketball, comes up here. Now, it has hit the resistance level at the 618 retracement. So you still got to clear that. But once it does clear that, we can see this breach those old highs, which that's what they want to do, which is $140 target. We got $141 at our first extension here on the Fibonacci. So that's the first extension, basically at 140, 141. And then we got $150 target. And then 155 if it, pops even further, because this squeeze can really carry us all the way up on this one. So when the squeeze fire off, that move is normally pretty big. So anyhow, I like that one to the long term. What you want to do is go dial in on the daily chart, define an entry point. Okay. Find your entry point. As you see, it hit that resistance level on the daily. That's the 618. And so you want to let it come back to the mean, which would probably be right here around 125 at this target. It could come down to the 100. You want to see how it plays, and it comes down, see if the price holds and volume comes back in. So if it does that, when it does that, that'll be your signal to get back in for the ride north. All right. So I do like that. One last one for the man, OG, the man, the myth, Ron B. All right. Okay, so DLR. All right. Looks like you're looking at an inverse head and shoulders, I believe. Y'all know Ron is the pattern king. Ron is my man in the clutch. You feel me? You got your Shaqs, your Kobe's, like he's the clutch. He's the guy in the clutch. And Ron always come through with it. He does his homework. That's why I love this guy. All right. So y'all know I'm busy. I need your help. Okay. This guy, he comes in and he's like, oh, what you think about DLR? He already knows what he's seeing there, right? And he already know that when I see it, what I'm going to say when I see it, right? I think Ron be testing me, y'all. Anyway, but you see this drop here, that gave us that left shoulder. We got the shoulder right there. We got the head right there. And then we got the right shoulder that's got to build, okay? Now, key level here is that resistance level. That is a key level, all right? So it's pushed up against it and it's trading up against it. There was a buy trigger that was right here that said, hey, get in, all right? So for me, I want to see it clear this level, and then it makes up the right shoulder. Inverse head and shoulders. Let me know if you guys got the Pattern Perfect book, because that's also included in your membership. Anyway, we got a lot that we offer, so but make sure you guys get your hands on that. But that's going to be it for now. We'll catch up in the group throughout the week like we always do. Any developments, we'll be on top of it. We'll be the first to know. Squad on deck. I appreciate you guys showing up. I appreciate you guys supporting us. We're trying to take it to the next level. You feel me? Make sure y'all subscribe to the Instagram page, or follow the Instagram page. Subscribe to the YouTube place, because we're trying to develop a great space in the YouTube place. I'm not a YouTube star, not even going down that road. We got our own website, but we'll definitely want to develop a nice presence in that space. Make sure you share, like, so that these algorithms pick it up, because there's a lot of noise out there, a lot of gimmicky people, a lot of crazy people. We are the real deal, okay? So we need the world to know that we're the real deal, and that only happens when you guys hit those like buttons, share, so that those algorithms on Facebook and Google can start to populate it. All right, gang, that's it for Game Plan Sundays. Going into this week, just remember we got earnings season being kicked off by the financial stocks. So financial sector is going to be heavily in focus. That's going to be on Tuesday. We got Wednesday, we got Thursday, and we got Friday. It's going to be a bunch of names: Goldman Sachs, JP Morgan, Bank of America, Wells Fargo, you name it, they're all there. Also keep in mind we got the CPI numbers that's going to be revealed also on Tuesday, so that may have an impact on the markets as well. We got the PPI numbers on Wednesday. Also, Wednesday is supposed to be the final the trade deal. So the trade deal is supposed to be finalized on Wednesday. The markets will be moving based off of that as well, so just keep that in mind. Also, if you like this money green take profits off the sweater, you can get that also. I post the links in the bio for you guys, so you can take a look at that. But anyhow, I appreciate you guys. We'll catch up in the markets this week. Peace.